I am Jeremiah Ajuda Dusu, the author of JAD's Business and Financial Accounting. Welcome to class again today. Okay, let's not waste time. Okay, we've been on group profit and loss. Okay, so of course we've been moving up gradually, so progressing. Today we're taking another aspect. Okay, so it's so today we're looking at income from investment in subsidiary. You can as well say income from shares in subsidiary. Of course, don't forget that your shares can be referred to as what? As equity. So we can say income from equity in what? Subsidiary. Okay? So I want to believe that you already understand what it means to have shares in the subsidiary. So that means the holding company, let's say A Limited, which is the holding company here. Then we have the sub here, right? Let's call the sub B Limited. So this guy here is the sub, right? What we're saying is that A Limited has shares in what? B Limited. Okay? And then, of course, the investment or the shares that A has in what? B would what? Usually yield what? Let's say dividends. Okay? Now, these dividends, of course, from the perspective of A Limited, the dividends received, is what? Is an income. Okay? So this dividend is an income from the investment in the subsidiary. So where A Limited has shares in B Limited and B Limited declares dividend. So that dividend is an income to what? A. Okay? But of course, you would agree with me that where a company declares or proposes dividend, they might not pay in that year, or they might not pay as at when the dividend is what proposed or declared. Okay, so it is now the decision, or let's say the policy of the holding company, that determines if the what dividend is captured in the year it relates to, or if it is captured in the year it is received. So there are two ways to it. The holding company can decide to what accrue for it, regardless of whether it has been paid by the subsidiary or not, or they can as well wait until the subsidiary pays before they capture it. So that is for the holding company to decide. Okay, so that's based on the policy of what the holding company. But what we're talking about here is that where we are preparing a group profit and loss account, and then the holding company captures the what income from what its investment or its shares in the subsidiary. Of course, at separate entity level, that is okay. But where we're not looking at what consolidation, we expect that what that income from subsidiary should not have effect on the what on the group P&L. So we expect that there should be what an elimination. Here's what I'm saying. Of course, you already know that you have, let's say, income from what? So, okay, this is holding company, this is subsidiary, right? So it is an income to the holding company. So let's say it is what? 50. Of course, we're going to have CP and L here. Okay, so we expect it should be this plus this to be this, right? But because this income is from what? A subsidiary, okay, of the what? Holding company. So at separate entity level, this is okay, it's an income. Of course, it can be what captured. But where we're not trying to consolidate, this 50 has to be what eliminated. So we have to adjust for it. It has to go out. So we expect that it will not have effect on the CP and what? L. Okay? So where the subsidiary declares a dividend and the holding company captured it. Okay? So at consolidation, even if it is correct, of course, we agree that it's okay. At 70 level, you should capture your income, no doubt. Whether you're accruing for it or capturing when you're receiving it, it is okay to capture your what? Your income. But when you're now consolidating, if you can establish the fact that that income is from the investment in the subsidiary, of course, the holding company and subsidiary now wants to be one. So at that level, at that group level, that income from the subsidiary has to be what? Eliminated by means of what? Adjustment. Okay? So we do not expect the what? The income from the subsidiaries to be part of what? The income at what? At the group what? Level. So when we can establish that that income is from the subsidiary, it is expected that what? It should be what? Eliminated. Okay? Of course, some accountants might not even show it on the face of the what? Of the income statement. They might put it in other income. But of course, when information reveals that that income there is from the subsidiary, you have to what? Eliminate. Because if you look at just that, trying to make, the line items not too what? Bulky. If you look at your IAS1, IS1 presentation of comprehensive income statement. Of course, you agree with me that there's something called the main activity of the business, or primary activity, or operating activities of the business. And there's something called other income, and there's something called other comprehensive income. Of course, there are some activities that are not the main activities of the business. So sometimes, not that sometimes, since they are not main activity of the business, we classify them as other income, of course, with respect to IS1. And then there are some other events that are not necessarily, operating activities, and they are not necessarily activities that are not the main activity of the business, but the happening of such events will result to what? Either a gain or what? A loss. Let's say, for instance, property owned by the business, okay, is being revalued. So there's going to be an excess. So that's like an income from revaluation of the property of the business. So that is other comprehensive income. Okay? So you have to understand that IS, differentiate between other income and other comprehensive income. So you should look at IS1 to get that, that view. Okay? But then, to keep it simple, we must understand or agree to the fact that what? Other income, operating income, other comprehensive income, they are what? Incomes, and then they have credit balances on the face of the what? On the trial balance. So when preparing your income statement, of course, you know what to do with that, right? So just that you should also understand what IS1 is saying about what? Other income and what? Other comprehensive what? Income. Okay? So let's quickly look at, of course, you have to take your time and go through what I just explained. What I just said here is simple, that you can have income from investment in subsidiary, or income from the shares that you have in the subsidiary, okay? And that when the subsidiary declares a dividend, of course, that's an income to the holding company, and the holding company can capture it. So as at the time of what? Consolidating, if it is part of the income of the holding company, it is fine at separate entity level, but where we are consolidating, we do not expect it to have effect on the what? Consolidated P what and L. So at that point, we have to what? Adjust or what? Eliminate. So take your time, go through. If you have questions, you can reach me on the numbers displayed. I'll just reply with the right answer. So let's take a question so you understand what we're talking about here. All right, let's really take this question so you get the point I'm trying to what? Make. Okay, so let's look at here. Here we have the following represent the income statement of Kings PLC and Kings PLC as at 2018. So we have all the items down there: turnover, cost of sales, all down to retained profit carried forward. Okay, so now they say King PLC acquired 90% shares in Kings PLC on 31st March 2016 when its profit was 1 million naira credit balance. It also acquired 45% preference shares in Queens on 31st March 2017. Goods worth 1.8 with a cost of 950 sold to Queen PLC by King PLC They had to be sold by Queen's Pay at the date of what? Reporting. Okay? You're required to prepare the consolidated schedule and consolidated income statement for the year ended 2018. Okay? So this is a straightforward question. Okay, it's just for us to understand, the elimination of what income from what subsidiary. Okay, so let's go. So we have consolidation schedule. Okay, so of course we're going to have kings, queens, adjustment. Then you have CP and what L. Okay. All right, so let's go. What do we have there? Turnover. We have turnover. Turnover there is 50. Queens, we have 41. What's the next one there? Cost of sales. We have 27. 22, 140. So this will be our what? What's the gross profit there? 23. 18,860. Okay, now what do we have? Total expenses. What do we have there? 5,750. 4,715. So what do we have here? Operating profit. What operating profit there? 17,250. 14,145. Okay, so what do we have again? Other income. So what's other income there? 3,450. 2,829. Now what do we have? Income from sold. Income from what? Sold. What do we have? 2,029. That's up there is the subsidiary, please. Okay. What do we have? 22729. 22729. So this is profit before tax. 16,974. Okay, so we have our what? Tax. What's the tax there? 6,624. Then we have 5,432. So we have profit after what? Tax. 16,105. Now what do we have here? 11,545. So this is profit after tax. Okay. So now before we proceed, let's look at the adjustment to understand if we have any adjustment here before we get to the income from subsidiary. So we have something here saying that goods worth 1.8 million with a cost of 950 sold to Queen's PLC by King's PLC are yet to be sold by Queen's PLC at date of what reporting. Of course, that's his intragroup what sales and purchases. I already taught the class on that, so you should take that to understand what that means. So what we're saying is that the holding company has sold products to the subsidiary, but when we're reporting, there are some part of the product that has not yet been sold by the subsidiary. So in that case, of course, I've already explained that yes, there needs to be an adjustment because you can't be selling to yourself. Okay, at group level here. If you're reporting at segment level, that's fine, but at group level, you can't be making profit or selling to yourself. So in that case, you have to eliminate that product that is yet to be sold at when we are consolidating. So here, we are saying that there is what? uh, who's worth how much, who's worth what they say there, 1.8. So you have 1,800 has to leave. Now the cost of the product is what? 950. So 950 has to leave here. So what do we have? Pick up the calculator, please. So we have 50,000 plus 41,000 minus 1,800, 89,200. So we have here, we have 27 plus 22, 140 minus 950, 48, 190. So 180 minus 950, 1,800 minus 950, we have 850. Okay, so this minus this, 89,200 minus 48,190, we have 41010. So we check with this. We check with 23,000 plus 18,860 minus 800. What do we have? Sorry, minus 850 rather. Excuse me. 23,000 plus 18,860 minus 850. So we have 41,010. So that's okay. So what's our total expense? That's this plus this, right? So we have 5,750, okay, plus 4,715. That's 10,465. So what do we have? 41010 minus 10,465. So we have 35,445. So we bring this here, we have 850 here still. So we check with this. 17,250, excuse me, plus 14,145 minus 850. So we have 35,445 there. Okay. So other income, we have 3,450 plus 2,829. No adjustment here. 3,450 plus 2,829. We have 6,279. Okay. Then income from subsidiary now. You can see that there's an income from subsidiary. So at 780 level, that's okay. But at consolidation, it should have no effect. So we have to what? Eliminate it. So we have 2,029. Okay. So that means it will be dash here. So what do we have? 3,0545 plus 6,279. We have 36,824. So when we drag this down, negative, negative, that's negative still. So we have what? Minus 850 minus 2,029. We have 2,879. So we check with this. Check with this. We have 2,2729. Okay, plus 16,974 minus 2,879. We have 36,824. That's great. So tax 6,624. 6,624 plus 5,432. We have 12056. So what do we have? 36824, okay, minus 12056. So what do you have now? 24768. 24768. So you bring this down here, you have 2879. So let's check. We have 16105 plus 11545 minus 2879. Okay, so what here is 11542. Excuse me, please. So if you check now, what do we have? I think this minus this is 11542. So we have 16105 plus 11542 minus 2879. Yeah, that's the 2478. Okay, so what we've done here now is to prepare the CP and L. Okay, taking into consideration the necessary adjustment, right? So at this level now we can consolidate. So what do we have here? So this is the profit after tax 11542. So we have remember we have ordinary share and preference share based on the question. Okay, what do we have now? So ordinary share structure, holding company is 90%, sub is 10%. Preference share, holding company is 45%. Minority interest, excuse me, is what? 55%. Okay, so here we have what? PAT of 11542. So first thing first, we have to take out of preference dividend, right? So what do we have? So minority interest for preference dividend. That would be what? 11. Excuse me. Ordinary dividend now. That would be 11,542 minus what's the ordinary preference dividend according to the question. Preference dividend is 2,500. So we have 2,500. So that would be equal to what now? 11,542 minus 2,500. That's 9,042. So minority interest for ordinary structure will be this times what minority interest here? 10%. 10 over 100. So that will give us what? This times 0.1. That's 904.2. 904.2. Okay. So what do we have now? Minority interest, preference share. That will be what? 55% times what is the preference dividend? 2,500. So what do we have now? 0.55 times 2,500. So this is 1,375. So total minority interest will be 1,375 plus 9,402, 940.2. So what do we have? Equal to this plus 904.2. This is 2279.2. Okay, so that's what we've done here. So let's go see what consolidated consolidated income what statement for the year ended 31st December 2018. Okay, so we have this, right? So we say what turn over 89,200. We have cost of what sales 48,190. So what do we have? Uh, 41010. 41010. This is gross profit. So what do we have now? We have total what expense. Total expense is what? 10,465. So what do you have? 35,445. So we have what? Operating what? Profit. So what do we now have now? Other what? Income. What's other income? 6279. Then we have 36,824. So this is what? Profit before what? Tax. So what do we have now? We have what? Tax. What's the tax now? 12,056. 24. So we have what? 24768. So this is a profit after what? Tax. Okay. So we have profit after what? Tax. So what do we do? At this level, what do you do now? You less minority interest. So what do you have? 2279.2. Okay. So less this. So what do we have? $24768 minus 2279.2. We have 22488.8. So this is what profit due to, or profit attributable to what? To the group, right? So at this level, the group would what? Take out what? Propose what? Dividend. So we have two. We have ordinary, then we have what? Preference. What's ordinary dividend from the group perspective? 5,630. We have a 5,630. Then what's preference dividend? 3,200. So this is what? Retained profits for the what? Yes, what do we have? 22488.8 minus 5,630 minus 3,200. That's what? 13,658.8. Okay, so we say retained profits brought forward. So this is what we do. That will be just for what? The CP and the others, the consolidated what? Profit after what? After acquisition. So retained profit and loss, or retained profit, excuse me, retained profit brought forward. So what do we do? What's the pre-acquisition profit according to the question? Pre-acquisition profit is 1 million. So we have what? We have the profit brought forward. What's the profit brought forward now? Holding company profit brought forward is what? 4,500. So we have 4,500 plus. What's the subsidiary profit brought forward now? Subsidiary profit brought forward 3,150. That will be what? 3,150 minus pre-acquisition what? Profit. That's 1 million. Okay. So we now have 2,150 times the ordinary share ownership structure of the holding company, 90%. That will be 0.9. 0.9 times 2,150. That will be 1,935 plus 4,500 plus 4. Excuse me. Plus 4,500. That's 6,435. So we have 6,435. So we add up 13,658.8. 20,093.8. So this is your what? Retained profits carry forward. 20,093.8. Okay. So what we've just done here is to, prepare group CP and L. Of course, taking into consideration adjustment for income from subsidiary. And then we had one other adjustment that we did. Okay. So take your time, go through it. If you have questions, you can reach me on the numbers displayed. I'll be able to reply with the right answers. Don't forget, you can support us by paying the account numbers displayed or sponsor copies of my textbook for free distribution. Thank you. See you next class. Bye-bye.